Imagine making hundreds of millions of dollars, being on the FBI's top 10 most wanted list, and also having the power of controlling governments. This sounds like something I've just made up, but trust me, I'm not. This is all 100% a true story. I'm going to tell you the crazy story of billionaire Marc Rich and how he founded one of the most largest companies in the world, Glencore, a company that did $217 billion in revenue in 2023. Just to put this in perspective, Microsoft did $211 billion in revenue that same year. And surprisingly, you probably have no idea what Glencore does and who even was this mysterious billionaire. But today, I'm going to pull back the curtain on the shady stories of import and export, and exactly how Marc made his billions from literally nothing. Marc was born to a Jewish family in 1934 in Antwerp, Belgium. But as World War II started, Marc and his family had to escape or risk being captured by the Nazis. Marc always had a knack for business from a very young age, perhaps learning the passion for it from his father, who started a jute bag import company in the 50s. After settling in America, Marc's ambitions grew as he ventured into the world of commodities. After studying a semester at New York University, Marc Rich dropped out and started working in the mailroom at Philip Brothers, then the largest commodities trader. The work he was given was hard, with very, very long hours, but with hard work ethic and natural understanding of markets, Marc slowly went up the ranks at Philip Brothers. He was a natural, and soon he found himself trading in oil, a commodity that was about to change the world. In the early 1970s, the oil market was transforming due to geopolitical shifts, and Marc saw opportunities where others saw risk. Rich began to explore the possibilities of the spot oil market. This was against the traditional model of long-term contracts that Philbro and other companies relied on. The spot market allowed for buying and selling oil for immediate delivery, providing flexibility and the potential for substantial profits during the periods of price volatility. The head of Philip Brothers, Ludwig Jesselson, who was quite conservative with his trading style, was very uneasy with the aggressive strategies employed by Marc Rich. Jesselson believed in a more cautious approach, focusing on stability and long-term relationships rather than quick profits from speculative trading. Despite the risky side of Marc Rich's tactics, they were undeniably profitable, and he became a significant earner for the company. But by the late 1970s, the stakes had risen. The oil crises had shown just how volatile the oil market could be, and Marc's success in navigating these tumultuous waters had grown his reputation immensely. However, this success came with increased tensions with his boss, Jesselson. You see, Philip Brothers was run like a family business, and crazy high salaries for the traders was against Jesselson's management style for the company. Even though Jesselson was grooming Rich to be his potential successor, Rich felt undervalued and undercompensated. Despite making the firm millions of dollars in profit, he and Green were only earning $100,000 every single year. Believing their contributions deserved so much more, Rich approached Jesselson with a bold request: a raise to $500,000 a year in salary. Jesselson's response was a firm no. He viewed such a salary as excessive and risky, fearing it could set a precedent that would disrupt the company's salary structure. This refusal, though, was the last straw for Marc Rich. Feeling stifled and unappreciated, he made the decisive move to leave Philip Brothers. He didn't leave alone, though. He went alongside Pinky Green and a few other key traders who believed in his vision. Then Rich went out to set up his own trading company. This new venture was called Marc Rich & Co., and it was founded in 1974. Free from the constraints of Philip Brothers' conservative approach, Rich was able to fully unleash his trading strategy, focusing on the spot market for oil and other commodities. But it wasn't easy. You see, one of the biggest fuels to grow a commodity trading firm is having access to capital, and the banks were usually the ones that would fund and help facilitate very large trades. So, in an attempt to curb Rich's success, Jesselson approached many of the top banks, complaining that Rich wasn't serious and not to be trusted with credit lines. A lot of banks actually believed Jesselson, and it made it really difficult for banks to agree to lend Marc Rich & Co. money for trading. But with tenacity on his side, Marc Rich was able to find one bank that would, BNP Paribas. Now, with the power of financing on the side, the company would go on to redefine how commodities were traded globally, setting the stage for Rich's very controversial but undeniable impact on the commodity trading world. Now, Marc was always very smart and always made extremely strategic moves. And in fact, his story is very much deeply intertwined with the history of the oil industry, particularly during the times of significant price fluctuations caused by major oil companies known as the Seven Sisters. These companies controlled the global oil market until the 1970s, maintaining stable prices through coordinated production controls. However, geopolitical tensions, especially during the oil crises of the 1970s, led to severe price volatility, creating both chaos and also opportunity. Now, this is a whole nother video in itself, but long story short, a bunch of countries that produced oil got together and started to have more control on the supply of oil. This allowed them to push up for higher prices than what the market dictated. But craziness actually started to begin in 1973 during the Yom Kippur War. This was a war between Arab countries and Israel. US and other countries that supported this war were embargoed and not able to purchase oil. This led to significant shortages of oil and drove the price of oil really high. As the price of oil was very volatile, this led to the creation of the spot market, and this opened up a huge opportunity for commodity traders like Marc Rich. Their business model was simple: buy incredibly low, wait and hold until there was a shortage, and sell at the highest price. By exploiting the price inconsistencies created by the oil crises, the firm capitalized massively on the emerging spot market for oil. This innovation not only reshaped the industry, but also skyrocketed the profits of Marc Rich's company. Marc Rich became very powerful. He controlled a large proportion of the world's supply of oil. But the madness did not stop here. In the late 1970s, Jamaica faced a huge economic crisis, and one of the contributing factors was the huge fluctuations in prices of oil. With Jamaica low in foreign currency reserves, they found themselves unable to import oil. Rich was then approached with an opportunity. It was 2 a.m. in the middle of the night where Rich got a call from the Jamaican government. The next morning, a whole tanker of oil with millions of dollars worth of cargo arrived in Jamaica just in the nick of time. The time that tanker arrived, the country was 24 hours from literally running out of oil. The country would have gone into spoils and huge economic downturn without the help of Marc Rich. He did this without any contract and just rerouted another shipment that was going to go elsewhere in the world to Jamaica instead. But why did Marc do this? You see, one thing that Jamaica is really well known for is its bauxite mining. And at the time, when Jamaica was going through huge economic downturn, the aluminium prices were at an all-time low. Marc essentially found an opportunity, and all he had to do was give the government a huge favor. He would supply the Jamaican government with oil, and in return, he would get access to a 10-year supply of bauxite at record low prices. He sold the bauxite with significant profits, showcasing his ability to leverage commodities in innovative ways to secure long-term benefits. Despite this trade being 100% legal, Rich's practices sometimes erred on the gray area of international law. During apartheid in South Africa, he saw an opportunity to sell oil to the country, circumventing international sanctions. He did this through various shell corporations and companies registered in small and unknown countries. This not only brought him immense profits, but also substantial criticism and further scrutiny from governments all around the world. The breaking point came with Marc Rich & Co. when they dealt with Iran in the hostage crisis. Despite strict international sanctions and immense international pressure, Rich facilitated the sale of Iranian oil, which led to his indictment in the United States. Marc Rich was indicted in 1983 on more than 50 counts of fraud, racketeering, trading with the enemy, and evading more than $48 million in taxes. This was the largest tax evasion in the US history at the time. So what did Marc do? Marc fled all the way to Switzerland so that he could seek immunity against all these charges in the United States. For 20 years, Rich lived in hiding until January 20, 2001, Bill Clinton pardoned him in his last day in office. The pardon ended nearly 20 years of Marc Rich being a fugitive to the US. But how did he get away with it all? Rich's ex-wife, Denise Rich, a songwriter and socialite, had made substantial donations to the Democratic Party and the Clinton Library. High-profile figures like the Israeli Prime Minister, Ehud Barak, and King Juan Carlos of Spain reportedly also lobbied Clinton on Rich's behalf. Pretty crazy, right? So that's the story of billionaire Marc Rich and how he evaded millions of dollars in taxes, was lobbying governments, and on top of this, supplying the world with oil. I hope you found this incredibly insightful, and if you're interested, I put a video right here on how Glencore became one of the largest companies in the world. Check this out right now.